Welcome to today's video on the Japanese yen. Today we'll take a look at the chart and an overview of the fundamentals to understand what's this sudden volatility that has overpowered the Japanese yen. The Japanese yen continues to climb to its 9-month high today, edging very close to its 1 year peak, which is just 100 pips away. Now, this rally typically doesn't persist for very long, as verbal intervention from the Japanese officials and a softer dollar always suggest that there is more room for yen weakness rather than dollar strength. If we take a look at the US data releases, they have ignited worries about the US labor market and boosted expectations for a Fed rate cut next month. Now, with the US government being shut, we did not get any data releases, but now it's expected to be released, including the non-farm payroll numbers and the inflation data. Any downside surprises could increase the bets on the December rate cut and, of course, weigh on the US dollar. Another thing which is impacting yen is that the yen continues to struggle as global markets are moving into a risk on zone. As you see the equity market surging globally, the demand for safe haven currencies have faded overall. Now, we can't overlook the fact that the new Japanese PM has a loser fiscal stance, and she's a lot more dovish, and the same is reflected in BOJ's actions as well. The Japanese officials have been warning about weak yen's impact, and the Japanese finance minister has repeatedly voiced their concern. However, verbal effects aren't really impacting the currency. What matters a lot more is that if the yen breaks above the 155 level, a rate hike might be the only thing that really halts this rally. If you have to take a look at the technical view, the Japanese yen is trading near its 9-month high in a strong ascending channel as visible on the chart. The momentum stays fairly bullish above the 55-day SMA. You can take a look at the yellow upward sloping trend line. A break of this trend line, which is very steep, would be the first sign of any reversal if any were to happen. And if that were to happen, we can expect a correction towards the 152 to 150 zone. However, seeing the candlestick pattern and the momentum, we don't think that this is likely to reverse anytime soon. We are at a critical juncture now, and importers should cautiously buy because this pair can go into a free fall. So we should evaluate and continue hedging gradually. At every dip we should buy. For exporters, we should take a look at any upticks in the yen, and then we can certainly sell. Thank you for watching.